Question 1. Which of the following best describes the difference between an occurrence policy and a claims-made policy in general liability insurance? A. An occurrence policy provides coverage for claims made during the policy period, while a claims-made policy covers incidents that occurred during the policy period regardless of when the claim is made. B. An occurrence policy covers claims arising from events that occurred during the policy period regardless of when the claim is filed, while a claims-made policy provides coverage only if the claim is made during the policy period. C. An occurrence policy limits coverage to events that occur within the first year, while a claims-made policy allows claims to be filed indefinitely. D. Both policies provide the same level of coverage and can be used interchangeably based on the insurer's preference. Answer. B. Explanation. An occurrence policy provides coverage for claims that arise from incidents occurring during the policy period, regardless of when the claim is filed. In contrast, a claims-made policy only covers claims that are made during the policy period, regardless of when the incident took place. This distinction is crucial for understanding liability coverage and managing potential exposures. The South Carolina Department of Insurance outlines regulations ensuring that consumers are adequately informed about the differences in policy structures, which is vital for effective risk management in business practices. Question 2. Mr. Thompson is a small business owner in South Carolina who has recently expanded his operations to include delivery services. He has an existing general liability insurance policy but is uncertain whether it will adequately cover potential delivery-related incidents. After researching, he discovers that he needs additional coverage to protect against specific risks associated with delivery. What should Mr. Thompson do next? A. Increase his existing general liability limits to include delivery coverage without consulting his insurer. B. Purchase a separate business auto policy to cover delivery-related incidents and inform his insurer of the new coverage. C. Cancel his current policy and obtain a new policy that explicitly includes delivery services. D. Maintain his current policy and hope that it will cover any potential delivery incidents as they are minor risks. Answer. B. Explanation. Mr. Thompson should purchase a separate business auto policy to cover delivery-related incidents while also informing his insurer about the new coverage. This is important because general liability insurance typically does not cover auto-related incidents. By acquiring a business auto policy, Mr. Thompson can ensure he is protected against risks associated with his delivery services, such as accidents or property damage during transportation. South Carolina regulations emphasize the need for businesses to adequately assess their insurance needs, and failure to do so can result in significant financial exposure. Question 3. When calculating insurance premiums, which of the following factors is typically NOT considered by insurers? A. The applicant's credit history and financial stability. B. The type and amount of coverage requested. C. The age and driving record of the applicant. D. The applicant's favorite color and personal hobbies. Answer. D. Explanation. Insurers consider various factors when calculating premiums, including the applicant's credit history, financial stability, type and amount of coverage, and driving record. However, personal characteristics such as an applicant's favorite color and hobbies have no bearing on insurance premium calculations. This approach is in line with South Carolina's insurance regulations, which mandate that insurers use relevant criteria to assess risk and determine premiums, ensuring fairness and compliance with state guidelines. Understanding what factors influence premium calculations is crucial for consumers to make informed decisions about their insurance needs. Question 4. Which of the following statements about workers' compensation insurance in South Carolina is true? A. Workers' compensation insurance provides coverage for all types of injuries regardless of whether they occurred on the job. B. Employers in South Carolina are required to carry workers' compensation insurance if they have 4 or more employees. C. Workers' compensation benefits include unlimited medical expenses without any waiting period for injured employees. D. Workers' compensation policies in South Carolina are regulated by the National Association of Insurance Commissioners, NAIC, only. Answer. B. Explanation. In South Carolina, employers are mandated to carry workers' compensation insurance if they have 4 or more employees. This requirement ensures that employees who suffer work-related injuries or illnesses receive appropriate benefits, including medical care and wage replacement. The other statements are incorrect. Coverage is specific to work-related injuries, not all types. Benefits may have caps and waiting periods, and while the NAIC provides guidelines, the South Carolina Department of Insurance oversees state-specific regulations. Question 5. What is the primary purpose of the exclusions section in an insurance policy? A. To provide a comprehensive list of all covered risks associated with the policy. B. To clarify which specific events or conditions are not covered under the policy. C. To summarize the premium payment options available to the insured. D. To outline the procedures for filing a claim after a loss occurs. Answer: B. Explanation. The exclusions section of an insurance policy specifies the risks and conditions that are not covered, thereby clarifying the limitations of the policy. Understanding these exclusions is vital for policyholders to manage their expectations and make informed decisions regarding additional coverage or endorsements that may be necessary. This practice aligns with the principles of transparency and fairness outlined in South Carolina's insurance regulations. Question 6. Which of the following is a primary factor that affects the calculation of an auto insurance premium? A. The geographic location of the insured's residence. B. The insured's personal preferences for insurance coverage. C. The insured's favorite car color. D. The number of friends the insured has on social media. Answer A. Explanation. The geographic location of the insured's residence significantly influences auto insurance premiums. Areas with higher rates of accidents, theft, or vandalism can lead to increased premiums. Insurers use statistical data to evaluate risk associated with specific locations, while personal preferences for coverage can affect costs. Factors such as location are grounded in quantifiable risk assessments consistent with regulatory requirements in South Carolina for fair underwriting practices. Question 7. Which of the following best defines the principle of indemnity in insurance? A. It allows insured individuals to profit from their insurance claims. B. It ensures that the insured is restored to the same financial position they were in before the loss without profit. C. It requires insurers to charge higher premiums for policies covering high-risk individuals. D. It mandates that all insurance policies must have a deductible clause. Answer B. Explanation. The principle of indemnity ensures that an insured person is compensated for a loss but does not receive more than the actual loss incurred, effectively restoring their financial position prior to the event. This principle is fundamental to insurance and helps prevent moral hazard where individuals might otherwise engage in risky behavior knowing they would profit from a claim. South Carolina regulations emphasize this principle to maintain the integrity of insurance practices and protect both insurers and insureds. Question 8. Which of the following actions is prohibited under South Carolina's insurance fraud regulations? A. Providing false information on an insurance application. B. Failing to disclose prior insurance claims history when applying for coverage. C. Sharing insurance policy details with other policyholders. D. Hiring an insurance adjuster to assist with claim filing. Answer A. Explanation. Providing false information on an insurance application is considered insurance fraud and is prohibited under South Carolina law. Insurance fraud undermines the integrity of the insurance system and can lead to severe penalties, including criminal charges, while failing to disclose prior claims may be unethical and could impact the insurer's decision. It does not rise to the level of fraud unless specifically intended to deceive. Sharing policy details and hiring adjusters are acceptable practices as long as they comply with regulatory guidelines. Question 9. What is the primary difference between collision coverage and comprehensive coverage in auto insurance? A. Collision coverage pays for damages resulting from theft, while comprehensive coverage covers accidents. B. Collision coverage applies when the insured's vehicle collides with another vehicle or object, while comprehensive coverage covers non-collision related incidents. C. Collision coverage is optional, while comprehensive coverage is mandatory in South Carolina. D. There is no difference. Both terms refer to the same type of coverage. Answer B. Explanation. Collision coverage specifically pays for damages to the insured's vehicle resulting from a collision with another vehicle or object, regardless of fault. In contrast, comprehensive coverage protects against damages from non-collision events, such as theft, vandalism, or natural disasters. Understanding these distinctions is crucial for drivers to ensure they have the appropriate coverage tailored to their risks as regulated by South Carolina insurance laws. Question 10. In South Carolina, which of the following is TRUE Regarding the duties of an insured after a loss occurs, A. The insured must notify the insurer within 60 days after the loss to receive benefits. B. The insured must provide a sworn statement of loss only if requested by the insurer. C. The insured has no obligation to mitigate damages after a loss occurs. D. The insured must file a police report for all types of losses before making a claim. Answer A. Explanation. In South Carolina, the insured is generally required to notify the insurer of a loss within a specified time frame, often 60 days, to be eligible for benefits. This requirement helps the insurer assess and investigate claims promptly. Providing a sworn statement of loss may be required based on the insurer's request, and while mitigating damages is essential to the claims process, it is not an optional obligation. Police reports may be necessary for certain losses, such as theft, but not universally required for all claims. Understanding these duties is crucial for policyholders to navigate the claims process effectively as stipulated by state regulations. Question 11. Which of the following types of insurance policies would provide coverage for a business that accidentally causes damage to a third party's property? A. Professional liability insurance. B. General liability insurance. C. Workers' compensation insurance. D. Property insurance. Answer B. Explanation. General liability insurance covers a business against claims of bodily injury and property damage caused to third parties as a result of business operations. This type of coverage is essential for protecting businesses from lawsuits and claims that could arise from accidents, slip and fall incidents, or damage to another party's property. Professional liability insurance covers errors and omissions in professional services, while workers' compensation insurance addresses employee injuries and property insurance protects the business's own property. Question 12. Under South Carolina law, which of the following statements about the claims handling process is true? A. Insurers are required to respond to a claim within 30 days, regardless of the complexity. B. Insurers can deny a claim without providing any explanation to the insured. C. Insurers must conduct a thorough investigation before denying a claim. D. The claims process can take an indefinite period without any obligation to the insured. Answer C. Explanation. Under South Carolina law, insurers must conduct a thorough and timely investigation of all claims. They are required to provide a reasonable explanation if a claim is denied. This ensures that policyholders are treated fairly and transparently during the claims process. A 30-day response requirement applies to straightforward claims, but may vary based on the complexity of the case. Insurers cannot deny claims arbitrarily or without providing the rationale for their decision, as this would violate fair claims practices. Question 13. In a scenario where Mr. Adams has a homeowner's insurance policy with a $1,000 deductible and experiences $5,000 in damages due to a covered peril, how much will Mr. Adams receive from his insurer? A. $4,000. B. $5,000. C. $1,000. D. $3,000. Answer A. Explanation. In this scenario, Mr. Adams has $5,000 in damages but must pay the $1,000 deductible before receiving compensation from his insurer. Therefore, the calculation for the payout is pay equals all damages. Deductible equals 5,000. 1,000 equals 4,000. Thus, Mr. Adams will receive $4,000 from his insurer after the deductible is applied. Question 14. Which of the following is a key component of risk management in casualty insurance? A. Ignoring potential risks to reduce coverage costs. B. Identifying, assessing, and prioritizing risks. C. Automatically rejecting high-risk applicants for coverage. D. Relying solely on government regulations for risk management. Answer B. Explanation. Effective risk management involves identifying, assessing, and prioritizing risks to minimize their impact on the insured entity. This systematic approach allows insurers to develop strategies to mitigate risks, such as implementing safety protocols or purchasing appropriate insurance coverage. Ignoring risks can lead to greater losses, while automatically rejecting high-risk applicants does not allow for the assessment of risk management strategies that could be implemented. Government regulations provide a framework but do not replace the need for proactive risk management. Question 15. What is the primary difference between occurrence-based and claims-made general liability policies? A. Occurrence-based policies cover claims reported during the policy period, while claims-made policies cover claims occurring during the policy period. B. Occurrence-based policies cover claims occurring during the policy period, while claims-made policies cover claims reported during the policy period. C. Claims-made policies have no limits on coverage, while occurrence-based policies do. D. Occurrence-based policies are less expensive than claims-made policies. Answer: B. Explanation. Occurrence-based policies provide coverage for claims arising from incidents that occur during the policy period, regardless of when the claim is reported. In contrast, claims-made policies only cover claims that are both made and reported during the active policy period. This distinction is crucial for businesses to understand as it impacts their liability exposure and insurance costs. Claims-made policies typically require retroactive dates, and the premiums can vary based on coverage limits and conditions. Question 16. Which of the following is not a requirement for obtaining a valid insurance policy in South Carolina? A. The parties involved must have legal capacity. B. The policy must cover a lawful purpose. C. The premium must be paid in full upfront. D. The agreement must be based on mutual consent. Answer: C. Explanation. While insurance policies require legal capacity, a lawful purpose, and mutual consent to be valid, it is not a requirement for the premium to be paid in full upfront. Many insurers allow payment plans or installments for premiums as long as the policyholder agrees to the payment terms. Understanding these requirements helps ensure compliance with South Carolina insurance laws and prevents disputes over policy validity. Question 17. In South Carolina, which of the following actions by an insurance agent would constitute unethical behavior? A. Recommending a policy that provides the best coverage for the client's needs. B. Disclosing a client's private information without their consent. C. Providing accurate information about policy features and benefits. D. Offering a discount to a long-term client renewing their policy. Answer: B. Explanation. Disclosing a client's private information without their consent is considered unethical behavior for insurance agents and is a violation of privacy regulations and ethical standards in the insurance industry. Agents have a fiduciary duty to protect their clients' confidential information. Recommending appropriate policies, providing accurate information, and offering discounts are all ethical practices that enhance client relationships and trust. Question 18. When an insurance company becomes insolvent, which entity in South Carolina is responsible for overseeing the liquidation of the company? A. National Association of Insurance Commissioners, NAIC. B. South Carolina Department of Insurance. C. Federal Insurance Office, FIO. D. South Carolina Attorney General's Office. Answer: B. Explanation. In South Carolina, the South Carolina Department of Insurance is responsible for overseeing the liquidation of insolvent insurance companies. The department manages the process to protect policyholders and ensure fair treatment during liquidation. The NAIC provides guidelines and resources, but does not oversee state-specific insolvency cases, while the FIO primarily monitors systemic risk within the insurance industry at a federal level. Question 19. What is a common exclusion found in most commercial property insurance policies? A. Damage caused by natural disasters. B. Theft of property on the insured premises. C. Damage resulting from wear and tear. D. Fire damage. Answer: C. Explanation. Damage resulting from wear and tear is a common exclusion in commercial property insurance policies. Insurers typically do not cover losses that occur due to lack of maintenance or gradual deterioration, as these are considered inherent risks of ownership. On the other hand, most policies do provide coverage for damage from natural disasters, theft, and fire, as long as they are not specifically excluded. Question 20. If an insured party fails to comply with the duties after loss provision in their insurance policy, which of the following is a potential consequence? A. The insured may be penalized with a higher premium. B. The insurer may deny the claim or reduce the payout. C. The insured will automatically lose their coverage. D. The insured is entitled to a full refund of premiums paid. Answer: B. Explanation. Failure to comply with the duties after loss provision can result in the insurer denying the claim or reducing the payout. These duties typically include timely notification of the loss, cooperation during the claims investigation, and providing necessary documentation. Compliance is crucial for the insured to ensure their claim is processed smoothly, as non-compliance can lead to issues in receiving the expected benefits under the policy. Understanding these responsibilities is vital for policyholders in South Carolina to avoid claim denials. Question 21. Which type of insurance would typically cover injuries sustained by an employee while performing their job duties in South Carolina? A. General liability insurance. B. Workers' compensation insurance. C. Professional liability insurance. D. Property insurance. Answer: B. Explanation: workers' compensation insurance provides coverage for employees who are injured while performing their job duties. It covers medical expenses and lost wages resulting from work-related injuries or illnesses. General liability insurance covers third-party claims for bodily injury or property damage, while professional liability insurance protects against claims related to professional services. Property insurance covers damage to business property, not employee injuries. Question 22. In South Carolina, what is the minimum liability coverage required for private passenger vehicles? A. $15,000 per person and $30,000 per accident. B. $25,000 per person and $50,000 per accident. C. $50,000 per person and $100,000 per accident. D. $30,000 per person and $60,000 per accident. Answer A. Explanation: in South Carolina, the minimum liability coverage required for private passenger vehicles is $15,000 for bodily injury per person and $30,000 for bodily injury per accident. This is known as 15-30 coverage and is designed to protect other parties in the event of an accident caused by the insured driver. Understanding state minimum requirements helps ensure compliance with legal regulations. Question 23. Which of the following statements about umbrella insurance policies is true? A. Umbrella policies provide coverage only for property damage. B. They act as additional liability coverage above the limits of other policies. C. Umbrella insurance covers all types of losses without exclusions. D. They are mandatory for business owners in South Carolina. Answer: B. Explanation: umbrella insurance policies provide additional liability coverage that goes above and beyond the limits of underlying policies, such as homeowners or auto insurance. They are designed to protect against major claims and lawsuits, offering broader coverage than standard policies. However, umbrella policies do have exclusions and do not cover all types of losses. They are not mandatory but can be highly beneficial for individuals and businesses looking to protect their assets. Question 24. What is the primary purpose of the South Carolina Insurance Guarantee Association? A. To provide insurance to high-risk individuals. B. To ensure that policyholders receive benefits from insolvent insurers. C. To regulate insurance premiums in the state. D. To offer health insurance coverage to low-income families. Answer: B. Explanation: the South Carolina Insurance Guarantee Association exists to protect policyholders and beneficiaries by providing coverage and benefits when an insurer becomes insolvent. It helps ensure that claims are paid, thereby maintaining consumer confidence in the insurance market. The association does not provide insurance for high-risk individuals or regulate premiums and does not offer health insurance. Question 25. Which of the following would not typically be covered under a commercial general liability policy? A. Bodily injury to a third party. B. Damage to the insured's own property. C. Personal injury claims. D. Medical expenses for injuries occurring on the premises. Answer: B. Explanation: a commercial general liability policy typically covers bodily injury to third parties, personal injury claims, and medical expenses resulting from accidents on the insured's premises. However, it does not cover damage to the insured's own property. That would fall under property insurance. Understanding these coverage distinctions is crucial for business owners to ensure they have appropriate policies in place. Question 26. In the event of a loss, what is the insured's responsibility regarding proof of loss under South Carolina insurance law? A. The insured must submit proof of loss within 10 days. B. The insured is not required to provide proof of loss if they report the claim. C. The insured must submit proof of loss within a reasonable time as specified in the policy. D. The insured must provide proof of loss only if requested by the insurer. Answer: C. Explanation: under South Carolina insurance law, the insured must submit proof of loss within a reasonable time frame as specified in the insurance policy. This proof typically includes documentation of the loss and any relevant information needed to support the claim. While insurers may request additional information, the responsibility for providing proof lies with the insured to substantiate their claim. Question 27. What is the primary difference between actual cash value and replacement cost coverage? A. ACV is based on the market value of the property, while replacement cost is based on original purchase price. B. ACV deducts depreciation, while replacement cost does not account for depreciation. C. ACV covers the property for its total value, while replacement cost only covers partial value. D. ACV is a mandatory coverage, while replacement cost is optional. Answer: B. Explanation. The primary difference between actual cash value (SCV) and replacement cost coverage is that ACV takes depreciation into account when calculating the payout for a claim, while replacement cost coverage pays the amount needed to replace or repair the property without deducting for depreciation. Understanding this distinction is important for policyholders to choose the right coverage based on their needs. Question 28. Which of the following best describes a fiduciary duty in the context of insurance agents in South Carolina? A. The agent must sell as many policies as possible. B. The agent must act in the best interests of the client and provide honest advice. C. The agent can prioritize their own financial gain over the client's needs. D. The agent has no obligations to the client after a policy is sold. Answer: B. Explanation. A fiduciary duty in the context of insurance agents requires them to act in the best interests of their clients, providing honest and ethical advice regarding insurance products and coverage options. This duty includes a responsibility to disclose relevant information and recommend suitable policies based on the client's needs. Agents are prohibited from prioritizing their financial gain over their clients' interests. Question 29. What is the primary purpose of a loss control program in a business insurance context? A. To increase premiums for insured businesses. B. To help businesses reduce the frequency and severity of claims. C. To determine the value of insured property. D. To monitor the financial health of the insurance company. Answer: B. Explanation. A loss control program is designed to help businesses identify and mitigate risks, thereby reducing the frequency and severity of claims. By implementing safety measures and best practices, businesses can minimize potential losses, which can ultimately lower insurance costs and improve overall safety. Loss control is a proactive approach that benefits both the insured and the insurer. Question 30. In South Carolina, if an insurer cancels a policy before its expiration date, what is the minimum notice period required to notify the policyholder? A. 5 days. B. 10 days. C. 30 days. D. 60 days. Answer: B. Explanation. In South Carolina, an insurer must provide at least 10 days notice to the policyholder before canceling a policy before its expiration date. This notice requirement allows policyholders time to seek alternative coverage and helps ensure they are not left without insurance unexpectedly. Understanding cancellation procedures is crucial for policyholders to maintain continuous coverage.